So just real quick, in case you don't know me, my name's Frank White. That's what I go by in the Discord and all that stuff. I'm using Paul's Zoom as a host, so you'll see his name up there, but he's not here right now. He's out taking care of some stuff. This is actually me speaking and using it, just so we're all clear on that. I appreciate everybody coming to this class tonight. And what we're going to go over is we're going to go over some footprint charts, okay? And almost all, and I say that lightly, right? But they're almost all the charting platforms have a variation of this, okay? On the Flowtrade desktop, they're referred to as clusters. On other platforms, they're footprint charts. It just depends on what you're using. And then obviously there's different little features and probably variations that you can add to them and use them in certain ways. Collectively, I think everybody uses them in a certain fashion, looking for similar things. But sometimes a platform will offer this that another one doesn't. Just real minute things. But overall, you should be able to get the brunt of it with some other platforms. But if you're using the Flowtrade desktop, which is what I'm screen sharing, that's what I'm going to go over. And then if you have questions on some other ones, we can talk about that later offline and then get you set up if that's something that you're looking forward to do. So basically a footprint chart is just, as you see, it's like a rectangle in a sense, right? With a bunch of numbers on each side, right? And you can kind of associate the rectangles as candles, right? Or bars. And the numbers essentially are the bid and the offers that have been executed at that price point during that time frame, right? I personally like to use them on a time-based setting. What I mean by that is using them on a 15-minute or a 30-minute chart, right? But you can use them on tick-based charts, where tick-based charts are not time-based. They're based on transactions and they're different, right? So, not to confuse you, but I'm going to go over use them in a time-based setting, and that's what I use basically every day. When I'm kind of analyzing what's going on in the market and then looking for trades to take or to stay out of based on that aspect. So first thing that we can do is, actually I can kind of go over the setup towards the end. That way, if people don't have the platform up or aren't interested, they can kind of exit out if that's what they choose to do. And then I'll go over actually setting it up if anyone has their platform up at the end, and then I'll go and it'll be recorded as well. So if you decide to come back to it later, you can always view the recording as well. But basically, we're going to start at the open, right? So the open is over here at 9:30, right? Here's your open here, right? And initially, when we got off the open, right, we created this imbalance here, okay? There's buy imbalances and there's sell imbalances, okay? So, a buy imbalance are going to be shown in green, and then the sell imbalances are going to be shown in this maroon or orange color. So all of the buy imbalances that I use as far as colors are going to be green, or they're going to be this turquoise color, all right? And then the sell imbalances are going to be orange or this maroon type color, okay? And all the other white numbers in here are just numbers of the transactions that are taking place at each tick or price point as price is moving up and down. So right off the bat, we created a buy imbalance here, right? And the way that you read these charts or these footprints is you got to read them diagonally, okay? So in a diagonal fashion. So you can look at it left and right, but really the way that you read them is diagonal. So the reason that this created a buy imbalance here is because this 68 is greater than this 19, right? So once we reached this price point, they really started to buy. So that created the buy imbalance. And then what that created is you can have an indicator on here. Oops.
I'm sorry, Frank. So the right side is buy, or sorry, the right side is buy and left side is sell order for that minute.
Yeah, so your buy imbalances are going to show up on the right side or the offer, and your sell imbalances are going to show up on the left side or the bid. Okay. Can everybody see the settings that I have here?
Mm-hmm.
Okay. So,
Hey, Frank, quick question for you.
yep.
I'm just unfamiliar with that software right now. So do those imbalances show up or do you draw those lines in?
No, actually, what's great is that they will show up automatically on the software as long as you set it up. And and I can show you how to do that as well. But it's really easy. Once you set in your settings and then you enable it, they'll show up automatically for you. So it's like you hardly got to even put any work in it,
Great, thanks.
Yep, no problem.
One quick question, Frank, before, how do you use that information that there is an imbalance, let's say 151? So what you are looking and what you're thinking on with that information?
Okay, let me go through the settings and then I'm going to show you as I go through a process on how I would use that to take a trade. Okay. Imbalance. Isn't how to use that info. I'm going to go over and show you how to use the imbalances to plan trades off of. Okay. An imbalance is basically, as I said down here, when you got a ratio and you can set the ratios, like there's a 3-to-1 ratio, a 6-to-1 ratio, and whatnot. And you can move these around as you see fit, right? But these are the ones that I use and that I like using and work very well, right? But you're going to get your ratios essentially by, if you got out a calculator, right? And you looked at this here and you said, okay, 68 and 19, right? So you're going to get your 68, you're going to divide it by 19, and that's going to create a 3.5 times ratio imbalance to that number, right? So that's kind of how we're getting it, right? So it's over 3. So that's why it's highlighted there, if that makes sense. And then when that happens, it creates these zones, right? I just call them zones. And they're generally going to stay up until you get good price that comes back through them and test them. And then that's how it plan trades off of it. So you get this imbalance there, you push up, you create one here, you're running into previous sell imbalances right on the left-hand side from the day before. So we were able to push through that. So if you were looking at taking a trade here, right, which I would recommend if you're new and you're not trying to chase something, waiting for a trade to kind of come back and test those imbalances to take a trade off of it, like here, right? Price moved up, and yeah, you would have missed out on this. If you saw something up here in the strategy that you take for a short base setup, then you could have taken a short, and then you would have been targeting these imbalances. So this imbalance that got left here as price pushed up with strength, right? You could have targeted this as your target 1. You could have targeted this as your target 2, and this as your target 3 on a runner. But you got to keep in mind that when you do fall back into these imbalances, they can also now be newly formed support, right? And you got to watch price and watch and see how it interacts at those price levels to see if price is actually going to bounce or if it's going to push through and continue. So when we're looking at this imbalance here and you saw price come back down into it, see here, you would have almost thought, hey, there's a sell imbalance here, but you caught a nice bounce. But then when you come back again and test it, and then you see this real big sell imbalance right, from this 321 to this 640, because we're reading them diagonally, and then you see price push through it, you're like, okay, this looks like we're going to get failure here. And now I'm going to anticipate moving down to this level, you know? And then when you get to this level, then this is where you start looking for your, again, for your bounces or support imbalance areas. So you broke through this one here, and then you finally caught a bid down here at this 92, 3/4, 93. All right. Discuss the value, different time frames of using the footprint. Definitely, Apollo. I'll definitely go into that. Let me get through this basic part first, and then I'll come back to your question there, because I do think that that is important, right? And it's all going to based on the trader, his strategy, and essentially what they like to use as far as trading. I personally prefer range or tick-based charts, right? Where you're actually trading price and not time, where this is trading time and not by price, essentially, you know, to a certain extent. But for this demonstration and this purpose here, I feel like that these time-based charts on this footprint do provide a good a good basis for people to use and start off using, you know, and then as they expand their knowledge and kind of start getting advanced, you know, then they could kind of start diving into, you know, those range based, and then, you know, bigger tick based, you know, whether it's 4,000, 10,000 tick based charts and whatnot. So here's a good example that I'm going to show you of what I'm actually speaking about. And if this is small, let me know and I'll try to make it bigger for you. But can everybody see this here?
It's kind of small.
Yeah. It's too small.
Is it still too small?
I zoomed it for my screen, but yeah, it's still small.
Yeah, it's small.
Yeah, it's better.
Okay. Okay, so when we're looking, this is kind of, I think this was after hours, but this is essentially the auctions that we're looking for, right? So when they talk, and these are, when they talk about clusters, okay, this is a cluster, okay? This is a cluster, a buy and balance cluster, okay? And essentially it would be the same thing if you saw, you know, 2, 3, 4, 5, 6 or more on the sell side, right? And the way you're getting that imbalance, right, is because 0, 8, 0, 8, 0, 8, right? So essentially, this is a completed auction because you got a 0 here. So at this point, you know, there was no more passive buyers that wanted to take this any higher, and they completed its auction. I'll show you what an unfinished auction is as well, right? But this is essentially what we're looking for, right? We're looking for these imbalances, right? You got one here as well, you know, 4 and 12, and then also on 0 and 7, right? And the reason that this was easy just to screenshot is because, like I said, this was after hours, so it made a real good example on what I was trying to show you on the previous screen. Okay, let me get out of that and move that out of the way now. Okay, so now we're looking. Now these gray boxes here, right? These gray boxes, there's a feature in the software where you can highlight unfinished auctions, okay? The reason that unfinished auctions are important is because, kind of like a point of control, which are these yellow boxes here, right? Unfinished auctions and point of controls can kind of be magnets to price. So you can kind of see price come back to those areas and those levels, depending on where you're at. That's why when you'll see me post some charts sometimes, and I'll say, hey, I'm looking for price to potentially come back to this POC. or to this unfinished auctions, auction or auctions, plural, that's kind of what I'm referring to, where I'm looking for price to essentially come back and test those areas. So if we bounce here, right, and we caught a bid there, you decided, hey, if your trade plan is looking at this imbalance and you're kind of looking at this one shows and looks like it has, you know, a little more strength than just this one here. So if you're planning to trade, right, I would think, okay, if I miss this move and I'm unsure even about taking a short down here, but I am certain that if price comes back here, I'm going to go long with the tight stop. You know, you can look at the top of the zone and say, hey, at 97 or 497, I'm going to place a limit order there to go long, right? Or, you know, if you're looking at your imbalance price and you want to stay at 95, you can say 95. Or if you want to come to the bottom and play it extra safe, you can say 92 quarter, or let's say 92 half, right? So essentially, and then I'm going to base this on a 10-point stop on NQ, okay? And in one contract, one mini, 10 points NQ is a $200 risk on this trade here, okay? So let's say that I wanted to play it in the middle, and I'm going to say, you know what? At 95, I'm going to place a limit order to go long. And then my stop is going to be at what? At 85, right? So, you know, that's down here, right? So you're giving yourself a good amount of room. You know, if you want to play it tighter, you can play this low here. If you want to give yourself more room, you can come to this low. It's going to base on your account, your risk tolerance, and how comfortable you are in this strategy and taking this trade, essentially, is what it is. But, you know, just me basing it off 95, a 10-point stop, okay? And then you're going to set your targets, right? You know, what are those targets going to be? Are you going to place, you know, these previous kind of lows that had imbalances? You know, that could be a target, you know, for a contract, you know, and if you got up there in this 35 level, right, from 95 to 35, that's 45 points, right? So 45 points on one contract is what, $900, right? So that's, you know, you're risking 2 to make 9, you know, that's what, 3.5, right? 1 to 3R, whatever, 1 to 3.5, right around there. So that's a pretty good trade in my opinion, right? If you want to play it safer, you can play with micros. You can say, you know what, I'm going to take 3 micros or 5 micros. I'm going to reduce my risk to $100. And then if we start to get up here on any pullbacks with strength, I may add to the position, you know? So let's say you run through all this here and then you get a pullback right here. And you're thinking, okay, if we come back now to test these lows here, I'm going to add another 5. It's just going to base on your trade strategy. But the point that's also important to for me to say is that make sure that you have predefined targets and stops based on your risk tolerances, right? I'm not saying that you have to put in an actual limit order on your target areas or a stop, but you need to still have them predefined. Some people like to trade without stops. Some people don't. You know, if you're new, I recommend you use them and you kind of play it as is. As you gain more experience, you may say, you know what, I'm gonna go without a stop on this, but I'm still sitting here and I'm watching it religiously. So in case something does go against me, that I can go ahead and stop out and flatten that position immediately. If you have a big liquidation, right, to the downside or accumulation of the upside that's going against you. Let me see where else I can go back and look at this. Okay, so we'll go scroll over here. All right, also, since I showed you that is using that as essentially a support-based imbalance, right? You know, we can also look at resistance-based imbalances or supply-based imbalances. This one goes back a little further, right? But I'm basically looking at these imbalances up here that were pretty significant, right? So if you're taking a trade long from down here, right? And you're constantly watching these imbalances to the upside, just making sure that you're seeing buying pressure to the upside to go in your favor. But when you really start reaching these stacked imbalances like this, right, where there's two lines, you can see it here and even up here, you know, you got to be careful to either take your profits up here, or if you're looking to trade for a short bias trade because you're the other part is the strategy that you're using in Flowtrade with the primaries or secondaries or whatever kind of showing weakness, then you can say, hey, you know what? I'm going to look for price to come up here. And if price comes up here at this 44 area or 42, I'm going to look to go short. And then where I'm going to place my stop, right? If we're using a 10-point stop, right, 42, you know, we're going to be at 52, which is right up here. So it gives you a little room where if you're kind of playing this right, that you're going to have room and have a high probability of this trade working in your favor. Now, what's the problem that you see here where if you're trying to short this to the downside? What would you guys consider the issue being? Anybody? Nope. Okay, I'll go. Okay. The issue for myself, you guys can still hear me, right? I just want to just say yes.
Yes,
Okay,
yes.
okay. The issue that I see here personally, right, is that this here on a chart can probably look like a bear flag, right? Here's your flagpole, and here's your bear flag, maybe a bear pennant, however you draw it, right? And then if you're drawing fibs on this too, you can probably, we'll take this low there, right? And we'll take it there. So you're looking for this retracement to come back to this 50 or this 618, right? So even here, you're probably looking for a short initially. Yeah, but the problem that you also have to kind of grasp in this is that you're making higher lows, right? And you created these imbalances here, and you're not breaking back down through them, and price isn't getting back down through them. And anytime you get close to them, look at, you're getting these buy imbalances. That's what you have to also watch out for. And even here, if you took it off the 50 or off the 618 here, back down for a few points, you're getting these buy imbalances. So that's something that I try to be aware of. And that's how I try to stay out of being wrong, right? So if I'm doing the flip side to the fibs, right, where this is my bearish fib and this is my bullish one back up, you know, and we come, let me delete this one and make it easier to see, right? So now we came down again and we're catching a bid at this 618 or this 382, however you have them drawn, right? This is a good 618 retracement right off this and this imbalance. So this provides a good amount of information for myself to use to decide, hey, you know what? I'm not sure that this bear flag is going to play out. And I almost think that it's a trap, and I'm going to want to go long here and take a long, and then I'm targeting my 1272, my 1618 extensions, and even further, right? You know, but essentially, if I was taking this trade, you know, I'd be targeting here, here, where that close to that 618, and then probably this high, and definitely probably not higher than this high. I would probably be all out by up here, if not here, to be honest with you. And like I said, it goes back to your risk tolerances and what you're able to go ahead. No, okay. Okay, so back to this. All right, so we're making higher lows, so that kind of would have been my reservation on taking this, right? And even here, so when we get back to the initial conversation of why I would just be wary of taking this all the way back down too far, is even though you did get a clean liquidation, we're still making higher lows, essentially, right? And so my other point is have a good trade plan, but don't be greedy, right? You know, even from 45 to to 495, right? That's 55 points. That's a really good trade if you held it all the way down here. So, you know, just make sure that you're paying yourself in the process because the way that we've been ranging with NQ especially has been 30, 50 to 100 point ranges back and forth at times. So if you're not taking your money and you're trying to write out a 200 or 300 pointer, you may pay for it at the end, right? When you're right, it's going to be great. But if you let it go against you or let it come back to zero, it's not going to feel so great in my opinion. So that's something to consider. So let me delete these fibs. Does everybody understand what I'm saying? Does it make sense or am I not making
Yep.
sense at all?
Yes, Frank. Makes
Yep.
sense. Thank you.
Right, just to understand the coloring scheme here. Okay, so where you have green shaded areas, you're saying there were buyers and no sellers, and the purple is sellers and no buyers.
It's not that there's two parts to it. It's not that there's no sellers. There's just an influx of buyers or sellers as opposed to the opposite. So, so essentially there's a lot more, is that mine? Yeah. So essentially there's the ratio to buyers and sellers based on the parameters that you're inputting it can be 3 to 1, can be 6 to 1, can be 9 to 1, etc. So that's kind of what I'm looking for based on the settings that you can put in the Flowtrade desktop, if that makes sense. Now you do have finished auctions, right? And finished auctions are where you can kind of see zeros here on the bid or zeros down here on the offer. All right. So like this gray area is an unfinished auction, right? Let me look for another one. I know it's a lot and it's a little confusing, but
So
I
when
really
you
go ahead.
calculate the numbers, you look at diagonally or right by side of each other, like 2768 or 13927.
Like the way to read them and the way that I view them is to view them diagonally.
Okay.
So when you're looking, like when you're looking at this 130 and 67, I know it looks like an imbalance because of 67, but the real way that you're viewing it is you're viewing it from the 40 to the 130. Does that make sense? You're not viewing it from 67 to 130. You're viewing it from the 40 to 130. And truly, as a beginner, you don't really need to even pay a lot of attention to it. You can kind of learn and understand it as you go along with it. All right. But but initially, I don't want you guys to try to dive so deep into it that you're going to be confused and then you're going to be shy about it, or you're not going to know if you should take the trade or not, right? Because you're trying to view all these numbers that you're probably not familiar with and a new process of trading that you might not be familiar with. And it's going to be a lot for your mind to handle. Okay. Like this would be a 3.25 imbalance from the 40 to 130, right? Because if you divide 130 into 40, that's 3.25 times larger. 130 is 3.25 times larger than the 130. Does that make sense?
Yes. So when candle is going up, you are looking left to the right diagonally. And when candle is coming down, how do you read it? Right to the left or?
You're talking about buy side imbalances and sell side imbalances, right?
Yes. Yeah.
Okay. So the sell side imbalances. So on a buy side, you're going to look down like this, right? So
Okay.
let's say from right to left, okay? And from sell side imbalances, you're going to look up from left to right.
Okay. Mm,
Frank, um,
Listen,
Frank, a question. All right. So, you mentioned the zones. I'll just tag the green and orange color or blue color, zones that are getting drawn, right? They are getting drawn based on some imbalance that we have out here, right? Like 80 to 73. Like I'm looking at the bar from the left, 1, 2, 3, 4, 5, 6, and the green zone or line being formed. It's 80 to 73. And I just want to understand this part, right? So if it was 3 is to 1 or 4 is to 1, there's an imbalance and the zone gets formed. So, but here it's not 80 to 73, right? So how is that an imbalance? I mean, like, why did this zone get formed? That's what my question is.
are you talking about this one here?
Yeah, from the left. Oh, now you moved more. All right. Okay. I'm looking at the time at 6 o'clock, 6 a.m. The bar at 6 a.m.
Okay,
Yeah.
right here.
Yes, yes. So why was there a zone, a buy imbalance formed out here? Because you have 80 to 73 and 54 to 114, but more so on 80 to 73.
Because 80 is a greater number than the 73.
Correct. But then
Correct. So,
142 is a greater than number than 86, so which is probably a bigger number. So why wasn't a imbalance formed there and why here?
oh, I see. Okay. Now, sometimes with these zones, right, when you kind of come back into price, you will start eating away or breaking through what a portion or part of those imbalances. Okay.
Right.
What is this saying here? I don't know what that is. Okay.
And then I have one more follow-up question.
Okay.
Uh, uh, this is the 7:30 time, right? So the 7:30 time frame has like 1, 2, 3, 4, 5, 6 imbalances, so to speak. So there are stacked imbalances in a way, right? 1, 3, 6, 1, 2, 5, and 77, 110, 130, and 148. So why wasn't a zone formed here? Is this like a software thing, or should there have been a zone being formed around this? I would just
My
want.
I'm gonna have to go back and look. My
Okay.
assumption is that there was an imbalance there formed via the software. Okay. But at times when price comes back down aggressively through these areas with sell imbalances or uh high volume sells in a sense offers, that
Mhm.
it kind of cancels out those imbalances. The other small nuances that I notice at times is that these numbers are going to vary a bit based on the intervals that you used on the software that you specifically have, and
Mhm.
even the data that you use, right? So if I'm using a rhythmic based data software on something else, some of these areas and numbers are going to be different than if I'm using the Flowtrade futures data or a CQG data or an IQ feed or a DX feed. Those are little things that will differ and will skew things a bit, but generally speaking, the big bulk of the imbalances and the numbers uh, are going to show up on a majority of the data sources and kind of be aligned correctly, if that makes sense.
Okay. Thank you.
Okay.
I have one more question, but it's
Okay.
related to like um, you know like, see, if those imbalances were not, the imbalance zones were not drawn, right? Like the purple color imbalance, and this is like 8:30 time frame I'm looking at, that there is a green buy imbalance, and on top of that there are two sell imbalances, and there is a blue imbalance, whatever it is. If I don't look at those guys, right, just by looking at the bar, all right, like you reach 3 and 21 or 21 and 90, there was a sudden sell-off after reaching here. Without knowing these imbalances and just by looking at the bar, is there a like is there a way to know, like, okay, it's reached this pinnacle, it's going to go back down now, because I don't know, 77 to 191, which is the previous bar, versus this bar 321, this is it, now it's going to go down. Is there a way to know this part by looking at this bar? And I apologize if it may sound like a irrelevant or probably even a silly question, but
It's not
better
silly.
asked.
I understand what you're saying, right? You're kind of looking for
Exhaustion.
more confirmation for your execution, right?
Yeah.
Okay. Here's the problem, okay? The problem is, and I'm speaking for myself only. I never really know if this is going to be it or not. Okay. I have an idea and a speculation and a theory based on what I'm looking at that I think should happen. But do I know 100%? Absolutely not. All right. I base my trades and my decisions off of, and this is where it's going to kind of come to each person and what they use and what makes sense to them. Right. So when I'm looking at this, I'm not just looking at this and taking trades just off this all day long and saying, you know what, I'm going to look and I'm just going to take trades off of imbalances. Absolutely not. I'm not doing that. Let me pop this out real quick so I can show you. This is a higher time frame based chart that I like to use just for planning a trade on a larger time frame scale. Okay. So when I'm taking my trades off of a chart like this, which is a 500 tick chart. Now I know it's different, and I know some people trade off of a 5 or 15. All right. But this is a tick chart, and this is what I take my trades off of. Okay. So if I'm looking at I'd have to go back, but so while I'm looking at this chart that I just showed you and this imbalance, right? If there's an overnight high here or VWAP, session VWAP, which I know some people don't use and don't, but I'm just speaking for myself, or a session VWAP or an RTH VWAP or whatever, or a settlement price. There's a lot of variables that I consider and that I factor into my trades. It's not just off of this. This is just a one part, and I'm not going to say it's a small part, but it's just one part. But it doesn't make my bias complete until I look at a bigger picture on everything else that I like to look at. Which is kind of some of the stuff I mentioned before. If I'm looking at fibs or a VWAP or a fair value gap that printed on this other chart, or an opening range high test or opening range low, I have 100 other things that I can mention that I take into account. And I'm not saying that I take 100 things into account on every trade, but there's just different things that I look at, because every time price comes back to an opening range higher VWAP, it doesn't always bounce to the tick at those levels. So you got to be able to gauge other things into what's going on, and even price action, watching a depth of market. And as Apollo asked about tape reading and then pulling and stacking of orders on the bid and the offer. Like, I'm looking at all that stuff. I'm not showing you that because that's going to be overwhelming, and it's overwhelming trying to explain it in an hour or two, because it takes, I'm speaking for myself, it took me months to be able to incorporate everything together. I'm just trying to show you this basic tool here, and how to incorporate it in your trading, since you have it available based on the software that's provided, and it's a great tool to use and take into account when you're planning your trades. But if I went through, we would be here for hours on multiple sessions, and I think a lot of these things that I would love to tell you more about are going to take more time, because it's not that simple, if that makes sense. Okay. Keith, I do not, when I'm looking at these, I don't really care or factor if it's a bullish or bearish candle. The only thing that I'm factoring are price imbalances, right? For the most part, unfinished auctions, right? Sometimes the point of controls, if I'm using them as a factor in my thesis on my trade. But for the most part, I could care less if they're bullish. I would love to get into Delta with you guys too, but that's another can that I don't want to confuse. I feel like this format that I have here is going to be the simplest format for you guys to try to use this and learn this. And then once a group of people start using it and learning it and asking questions, then we can kind of move on to a little more advanced class where we go over some other stuff. But this is a lot, honestly, and I don't know if it seems like a lot to you guys, but I feel like it's a lot. And what I don't want to do is cause any more confusion than needs to be based on what I'm just trying to explain to you, and kind of keep it as simple as possible. Let me go back. Are you using footprint numbers for making the trade decision in addition to support resistance? Yes and no. I don't know essentially what each person uses or factors as their own support, resistance, supply and demand zones, right? So if they line up with your areas and you feel like you have a high conviction trade in it, you know, whether it's fibs or levels that you draw out yourself, then by all means, you know, I would use it in conjunction with other stuff that you're using that makes sense to you, that you are having some success with. But I would not base any trades solely on this here or whatnot, unless this is specifically what you decided to view and take your trades off of, which are people that do. You know, there are people that you view 5-minute footprint charts or even tick-based charts or range-based charts and take trades off of them. But if it's not something that you do, I don't think that that's a wise decision. I think this is just a feature or a tool that you can add to what you're already doing that will help, and will help you also identify the bigger picture and what's going on, right? Because a lot of times when we get so focus based on looking at 1-minute charts or 5-minute charts, sometimes you can forget essentially what direction we're headed or what the trend is, right? Because even today, for example, right? This is at 6 a.m. here, right? And this is what we were talking about that looked like a bear flag, right? And we actually ended up coming through it and so forth. But even on this pullback, if you shorted up here before market open, right? And this was data. So this may have not even happened like that if there was no data that was reported at 8:30. So this sometimes can skew the overall aspect, right? Because what if this is just big firms, big money, you know, and this is a stop run against everybody who's long all this move, and all they did was accumulate their entire position. They made a higher low, and then they ran it right back up in everybody's face, and then sold it higher to everybody who was willing up here after they got it for a huge discount based on the data that came out all the way down here, right? That's what you have to consider when you're looking at things as well. At least in my opinion, you should try to consider. Yeah, it's the same, Apollo. It took me a few months, and I would stare at it and just see numbers, and it wouldn't make sense, right? But then slowly I started understanding it and then doing my homework. And essentially that's where I'd like to get with everybody. But for sole simplicity, I would help you get set up and then start viewing these. And then if you got questions or ideas, we can screen share or post or send screenshots to each other on what we're seeing and saying, hey, what do you think about if price comes down here to go long? Hey, I think that's a good idea and this is why. Or I think that's a bad idea and this is why, And then essentially you're going to have to monitor it, and it's going to have to be ideally your decision, right? Because you're the one that's taking the trade and not taking it. But that's kind of my take. So here, right? So even when we ran back up, my assumption is that there was probably a lot of and you can kind of see it even here when price got to this area here and it rejected because price pushed down, right? But after price pushed down and caught that bid, we're still making higher lows, and then we ran back up and made higher highs. So if you weren't quick to take your profits off of this liquidation of the downside with the news, or even this resistance area based on the imbalances up here, right? And you try to hold on for a move down here or even a move down here, you lost money or you probably got stopped out, because look where price ran to, after and even furthermore, right? If your price is moving up and you're trying to average down here and then average down again here and then average down again here, your price point is, let's say, at 41, 42, 41 half or 40, right? And then you get up to 60, now you're 20 points underwater, right? Now you're at 80, now you're 40 points underwater, right? Maybe on micros, but on minis, 40 points underwater is a lot for me personally. I don't want to be 40 points underwater,
Hey, Frank, can I ask you a question?
Yeah, absolutely.
So if you don't trade futures, but you kind of want to learn them and learn this format, is it worth like trading QQQ or like an ETF? Because the losses would be less, but you could kind of practice with that. Does anybody do that?
Yes. So I think that you can get some good comparisons with trading either SPX off of the ES imbalances and stuff like that, and or Qs off of NQ, right? There's going to be differences, but generally speaking, if you're going to catch strength on one or the other, so like when I'm watching,
Because it seems like you could, start that way and buy yourself time and then eventually kind of work to shorter options and then eventually move towards like the mini and the regular NQ. I mean, you wouldn't see as much of a jump, but it might be a good way to practice for, a beginner.
Absolutely. I think, that's a really great idea. And I think you can definitely do that. And or the other aspect for people who just want to trade futures is just to trade the micro contracts. Start with trading 1 or 2 micros, right? And just keep it very small, right? 1 micro, every point is $2, 10 points is $20. So it's your 10 to 1. You're not making a lot, but you're not losing a lot. And you're going to give yourself, you're going to get that experience and that trial and error on what you're using with minimal risk, right? But I watch a lot more of SPX with ES than Qs with NQ. I do view the Qs, but since I watch a lot of the tech stocks in general, so that's kind of my big Qs snapshot. You know what I mean? And the SPY sectors focusing on XLK, because that's the tech heaviest weighting in the SPY. So earlier today when when we made this move down here, right? And the market was looking weak, you know, I had some people ask me, hey, you know, what do you think about this short here? You know, and I was looking around and I was looking at XLK and I was like, look, XLK is negative. No, it wasn't negative. It was maybe positive like 0.3 or 0.35% on the day. I go, if we want to see failure, XLK needs to get to break even, right, at about, you know, 0.5, or even negative, or start going negative on the day, for us to actually see big failure in NQ to come down to test the lows. And once we saw XLK start pushing up into 0.4, 0.5, I was like, hey, I'd be really careful holding on to this short here, because I think price is going to flip and they're going to run it back on you. And it just so happened that, you know, one of the 2 times out of the day that I'm right, it worked out. You know what I mean? Okay. I feel like I've been babbling. Does anybody have any other questions?
Right on, okay, there's a candle here. I was just trying to understand. At 12:45, we had a reversal in the NQ and it printed a 0 at the bottom. Does that mean that price moved up so fast that nobody was able to buy?
So when you see zeros like this, and you have to catch them fast, right? It's hard to catch these on a 15-minute time frame. That's why I was saying that some people uh trade them sometimes on 5-minute time frames, or even tick charts as well. But basically what happens in those, that's where they trap shorts. So everybody who was short, and wanting to short, you know, kind of trying to chase this, you know, they trapped them. And when they trapped them and they shut off sellers and they ran it back against them, now not just everybody down at 91.5 is trapped, but even probably all the people that they ran up against up here to 09.75 and even 12.5, everybody from this level down below is all trapped. And so that's when we'll talk about sometimes about, hey, watch out for the trap, or watch out for trap sellers or trap buyers. And it's I'll show you the delta in a minute. Yeah. And the delta, it's kind of easier to see on the delta, right? When you familiarize yourself with it. But I also think that that's a very great observation to have. And when you see that, that's when you also start looking for potential reversals. But you got to look for them when you have spikes. I think are better played than when you're trading kind of in consolidation or chop, because you can see zeros, but that doesn't mean that they're going to trap everybody at that moment. You want to see very aggressive moves in one side or the other, and then you want to see that zero. So like up here, the zero would be on the left to trap buyers, right? So anybody who was chasing this long to the upside, if they cut it off and put a zero there, they trapped all the buyers and then they ran it down aggressively, right? Against them. That's how I would play that personally. But let me change this to show you guys the delta. I like the delta, but the reason I took it off is just for sake of simplicity for everybody, because I feel like it's going to add more colors and it's probably going to provide more confusion, right? But since I'll go through the setup real quick as well while I'm talking through this. So when you in your Flowtrade desktop, right, you got to make sure that the bottom part is enabled, which is down here, right? And you do that by this magnifying glass on the top right. So you click it, right, and then it opens up all these options down here. These time statistics real quick, all right, are what you can see the totals on trades, volume, delta percentage, which you'll see down here. All right, but we'll leave that for another day. All right. So you go to clusters, and then what you're gonna do, I'd select a 15-minute time frame, 1 month candle, simple, just like that. Go to the settings, open it up. You're gonna enable clusters by clicking there. All right, once you enable clusters, you're gonna come, you can choose single, double. I choose the imbalance, right? Because that's what we're looking for. But if you choose single or double, what essentially that's going to do is that's going to open up sell volume and buy volume and other options, right? With delta percentage and all that good stuff in there. But for sake of class and simplicity, this is how we're keeping it. Now, here's where you can choose. So I have the histogram setting that's going to show kind of a histogram on both sides of the volume traded, right? But you can click none, right? And it takes everything out, just leaves numbers. You can do it by trades, right? You can do it by volume. You can do a custom, or you can do it by delta. Now here's the delta. This is how I had it previously. And I like using the delta. I think it's very important, but you know, for sake of simplicity, I kept it that way. Now, real quick, delta is basically market buys subtracted by market sells, and then you're going to get a positive or a negative number. Okay, so if there's a positive delta, there can be negative delta, and so forth. And then that's when you can start implementing cumulative delta and all that stuff into your trading, right? But if, like, since here is the 43, if you look down here, right, where you were talking about at 1245, so 43, and what I wish is sometimes that you'd have another variation where you could see the total of a positive or negative delta based on the price point, because here you would take your 43, all right, and then you would subtract it from 0, right? Because this is a 0. So 0 minus 43 is going to give you a negative 43 delta. Based on heavy accumulation. Yep. Yeah. So see, yeah, that was a perfect negative delta move that you caught there, right? And like I said, not to confuse you, but that's another aspect that you can use that can kind of add confluence or give you more conviction in your trades, right? You got this imbalance zone that printed previously, so you're looking for price to potentially come down and then provide a buy or a bid there to go long. So you use that in conjunction with other stuff, levels, supply and demand, support, resistance, your Celts, whatever, and a negative delta. And then you're like, you know what? I'm going to go long here based on all these factors. Now, these are the colors that I use for the delta, right? Let's go back to the histogram real quick, just so we can stay with that there. So I look for the imbalance ratio of 3 and 6 to 1, right? And these are the colors that I use for mine. You can use whatever colors make sense to you. That's what I recommend. Whatever's going to help you identify them so you can trade from them and use them to better your trades and your performance. My zone counts are 3. Okay, I don't have any filtered volume right now. You can highlight zeros, right? Why would that be highlighted there? Okay, never mind. I highlight unfinished auctions, right? So I highlight mines in gray with the white background, all right? And these are unfinished auctions, like I spoke before. These are areas. So when we're moving up here, this is an area where we want to look for price to come back down and test, because it was unfinished here, but when you came down in this candle, look at that 0. That's a finished auction now, based off of that level there that we came through and we finished it there and then bounced and pushed higher. Okay. I show the cluster delta, which is at the top here, right? So you can see if the overall candle is negative or positive delta, right? And then I also have the delta change. You can have that on or off. It doesn't matter. Even the volume, if you're not ready to dive that deep into it, you don't have to yet, but I keep them up because this is stuff that I like to view along with some other things, right? I show the POC in yellow. Generally, I like my POC in an orange color. That's how I view all of my POCs on my other charts. So I'm just going to do that there and change it there because that's how I color code my stuff. But it's all up to you and what makes sense, okay? I don't do the value area. The grid is just so there's like a box drawn around it. You don't have to keep that if you don't want to. I just keep it in there for sake of simplicity in case I have other stuff on the chart like this profile. When I have numbers, this is a weekly profile. Over here is a daily profile when we're trading RTH. Another thing that I do use and add are these dynamic flow channels, right? So here's, let me turn it back on. So here's a 15-minute. Let me go to the right to make sure it's going to show. Okay, yep. So these are 15-minute counts or flow channels, right? So I like to use those because earlier in the day, I think it was here, this also lined up with the bottom of that 15-minute count there or flow channel. So that would have been another piece of information that if you're trading your flow trade strategy, you could have used and said, hey, this lines up with this imbalance. We got a negative delta of 43. We got another support area, right? Or demand area. And it lines up with this 15-minute flow channel. I'm going to take a trade and go long, and I'm going to target XXX areas. And then the other one that I like to have is I'll have the 4-hour. I turn it off if it's in the middle of everything, but I'll just flip it on and off just so I want to know where the 4-hour Celts or flow channels are, just for reference. Personally, I like to kind of keep those. So since we got above those today, right? That kind of showed or told myself that there's some good strength going on in this market if we can kind of stay above these areas and or come down, bounce, and then get back above them, etc. What else did I want to tell you guys? Any questions?
Rank, Hank here. Question. In your cluster settings, right? Why didn't you activate the 9.0 imbalance?
I think because they're far and few between that you actually start seeing those. Like there has to be a lot going on, and I feel like with NQ, for me to be able to focus on these two as opposed to focusing on the third one and something else, it's going to be because I can turn them on, right? It's just going to skew things, right? I think these two enough are important where you can focus on these and use these to your advantage. I don't really want to add any more overlapping colors and stuff like that. That's going to kind of create a little confusion to it. I think with these two, and based on the 15-minute and the way that I've been using them, I feel like they provide more than enough adequate information for you to use and base your trades from without having to add something else to consider. The more things that you try to consider when taking a trade will make you miss it, or will make you late on the trade and miss your and either chase it because you missed your execution or miss it completely and watch it go. So while I definitely can complicate a lot of stuff and personally because I like complicated, but one less thing to complicate anything else is better in my opinion.
Okay, thank you.
No problem. Anybody got any questions on the settings or anything? Okay, I appreciate you posting them, Bear. Thank you. I didn't realize you were posting them as we went along, but I appreciate that. Yeah. So those are the settings that I'm using, and I don't trade a lot of ES. All right. Here's my ES chart, right? Let me turn a bunch of this stuff off. I will monitor ES and kind of flip through it, but I just don't trade it a lot. And I know some people do like to trade it a lot, and it works the same way on ES. It's just going to be a little bit different. Let me turn this off here at the bottom too. Because ES isn't going to print as many, and I think you're going to have to adjust the settings, and that's something that I could definitely do and help out with, right? With adjusting, because essentially ES only printed one right here, at least that I'm seeing now today, right? And that was early this morning. There may have been more that it ran through. Let's look back some and see if we can kind of find any more. And essentially, I think what it is, I think it's my settings that I need to go over and adjust them so we can kind of see more prints on ES, because there should be more, in my opinion. Okay, so here's some good ones that printed previously, right? Jesus, this was a while ago if we're going back this far. Okay. Yeah, so here's some on ES, but essentially, I'll try to go through it and adjust some settings on this, and then see if I can come up with something that's going to be beneficial for you guys that trade ES, so you guys can kind of get it and set it up as well. That way you guys can try it out on your preferred timeframes trading ES, and everybody can kind of have a shot at using it on what they like to trade off of, because I think that's fair as well. So that's something that'll be my homework, and I'll work on that, and I'll get back to you guys on it when I come up with something that I feel is useful and worth looking at. Okay.
Okay, thank you.
Does anybody have any last questions going on about anything I might have missed, or anything that I didn't cover correctly that didn't make sense to you? You know, it doesn't matter if you think it's a silly question. I'm sure it's important, and I'm sure that there's many people that probably are wondering the same thing. So by all means, don't be shy, feel free, and I'll do my best to give you a correct and elaborate answer so you understand it. Are you guys sure this is your time here? So while we're here, you can type it in the chat. If you don't want to say it on the mic, feel free. But you know, I'm here to help if you guys have a question and or questions. I don't want to.
Frank,
Yes, sir.
a question on point of control, right? Like, how important do you leverage the point of control during the entire trading, when you are making decisions, like a bar opened and closed, now it has a point of control. Do you anytime leverage or make any decisions based on point of control of a particular bar or particular set of previous historical bars
Yeah, so
alongside imbalances?
I don't use them a lot in conjunction with imbalances. I could see what you mean, where sometimes they'll line up, right? Like here, they kind of line up
Correct.
with these imbalances. So I am certain that there is a way to strategize it in order for you to use it the way that you're saying. The way that I like to use pointed controls is I will either use them on a profile, right? Whether it's a weekly or a daily profile. And then let me go back here. Actually, let me do this. And then the other way that I like to use them is I like to use them based on a
Oh, wow.
30-minute time frame footprint chart. So let me find okay. So when this is a different software, right? But it's essentially similar. It's just so these are 30-minute footprint charts, right? So the footprint is here, the left and the right, and then this outside part is the delta that we were speaking about, right? Where here's your negative delta because you got a bid of 340 and then an offer of 147. So, you know, if you subtract 340, you know, minus 147, you get negative 193 and so forth. But so, okay, here we go. This is a good one here. So, and just real quick for disclosure, right? These 30-minute footprint charts that I use are on a 4-to-1 tick ratio. So that means that I'm looking at 1 point essentially based on the interval for this, as opposed to the Flowtrade desktop, which I don't think you can change that in the settings, and it's kind of 1-to-1 where you're looking at every tick base. So if I put this chart, this footprint against a 30-minute over there, they would be totally off in numbers wise, the numbers aspect, because my interval here is a little different, but the concept is the same. You know what, you don't have footprint charts in Thinkorswim. Unfortunately, they don't offer it there. That's one of the few platforms that they don't offer it. And it's yeah, they don't. If I had a script, I'd give it to you, but they don't. You can do like some profile on it, or I'm sorry, some TPO, right, with the letters, you know, for each A period, B period, and all that stuff, but not footprint as far as I know, right? You're gonna have to transition to one of these other platforms that offers it. Maybe it'll be an update in the future for them, which I think would be beneficial, but I don't know if that's something that they would consider, honestly. Point of control, right? So every time you print a 30-minute time frame, you're gonna get a point of control for each 30-minute candle, right? Just like you do on a 15-minute candle, right? So these all at some point printed a point of control. The way that I use them is I use the pre-existing point of controls. So when we printed one up here at 10:30, right? And it printed, and then price came down, right? And then we opened up, and we opened here, we came up here, right? We created an imbalance up here, and then we sold down, right? And then we came down to this low, closed somewhere up here. But essentially, as price is moving down, if you don't have a trade plan to go short, something that I would look at, and here's your 1230 that we talked about earlier, right? Where you got that bounce, which would have been 1230, 1245, which would have been here, right? Same concept, right? So you can kind of see what I'm conveying to you. That way it all makes sense. All right, here we go. That's even better. All right, so what I like to do is I like to target these levels back up or down depending on what direction we're headed. So if we came down here and it looked like we were catching a bid and getting a bounce, right? You know, so now you can kind of see some of the other stuff that I look at, right? So I got these zones, you know, I got a average there. I got a close. I got the opening print of the day, you know, on some unfinished auctions. It's a lot of stuff, right? But it's just my process. So what I would like to do, if I got long here and then we made it above 520 here, you know, my next area that I would look for would be a test of this 73/4 or 71, right? Right up here, right at the bottom of that zone. And then if we continued, I'd essentially be targeting these imbalances, but this point of control, because at some point, price is going to go back and want to test and touch these other point of controls. At least that's what I've noticed on these 30-minute footprint charts that I like to use for reference to take trades from, right? So then we didn't quite hit it, but we got close enough. So if you didn't get the low at even 15.5 and you got in at 520 and you rode it to 570, that's 50 points. That's a really good day. If you held on more, and you got to 585 or 590, that's 70 points. And even if you got up here to 598, you were shy of that 600 level, but that's still 70, 75 points. I mean, that's a huge trade, at least in my opinion it is, right? And you still see it's there. So at some point I'm going to be looking for price to go back and test that level and push through it. Now it's obviously when it happens, right? Because I don't know when it's going to happen, but that is definitely something that I'm looking for. Just like this one here. This is after hours, right? But you had this point of control that printed, and it's actually at settlement 38.5, right? 538.5. Settlement price is a huge level that I like to look at and pay attention to, again, personally. All right. I think it's just an important price point for futures. And I always pay attention to where settlement is, right? But price came down, it dipped, right? You actually ended up catching a bid. And what happened? Essentially, we came up. So even at 25, if you got in at 25, and you were targeting 38.5, right? That's what 13.5 points, right? On after hours trade. That's a pretty good trade, right? But you came back and actually touched that level because I see them as magnets, and I see price almost always coming back to touch those levels, and either you're going to see rejection near them or we're going to touch them and push through them. But you can use those as targets or stops or whatever the case is based off of your trade plan and strategy that you like to use for trading. Yeah.
Thank you.
No problem. No problem.
So Frank, how do you use this information to trade options, if you can, quickly? I think you mentioned it already, but
Yeah, so Blonde Broker was talking, she brought that up, right? So the way that I would like to do it would be I would have, let's say if we were looking at, so we're going to use this bounce here, for example. So let's say that I'm seeing all this movement down, and I'm looking to essentially for price to catch a bid at some point, right? And to potentially go long, right? Let me draw this up here and see how this plays out, because I'm just curious as it's kind of looking at it. Okay, so we went down. So if this was a 618, this must be a 69, maybe a 786 down here on a full spectrum, right? Okay, so I would have this chart up and I would be monitoring the imbalances and kind of looking at price and what's going on. Now, if my assumption or my speculation or my thesis is that price is going to bounce at one of these levels and I'm going to catch a bid from it to go long, then I would have the options chain up. And essentially, if you're able to, you have the options chart up, the actual options chart, right? So let's say, what was that? Let's say, what was that on the Qs at 12:30? Okay, so that low for the Qs at that time was. We'll put them side by side. This is a price chart. It's not an options chart, but you guys will get the, will kind of understand what I'm getting at, right? So, oops, sorry about that. Are you guys able to see this chart next to it as well?
Yes.
Okay, so here's that low that we're talking about. This low, 1250, right, kind of coincides with, geez, where am I? I'm totally off on this one, huh? Okay, let me just go to the right. Sorry about that. So that lines up with right here, okay? So if I'm looking to take to go long here, right? Or buy a call or whatever on Qs. I see price come down. I monitor it. I see that we're holding it at support. I'm using all the other factors. I'm looking at this. This is a 3-minute chart, by the way. I usually like to look at 3 minutes intraday. You can use 135, whatever you like to use to base your trades from. This is just me, what I like to use, right? Other things that I'm looking at, that's important, right, for me. I like for price on equities to stay above their opening print of the day, right? It just so happens that the opening print was 376.94 and the previous close was 376.93. The opening range low, 376.87. These are all important numbers to me if I'm trading equities, all right? As long as we can come down and test the opening print, but as long as we close above it, I'm going to look to take to go long off those bounces, right? So look at this candle, right? We came down. Look at this long wick on the bottom, right? We got bought right back up, you know, on that shows that there was buyers that stepped in and on the bid and bought this right back up there. Right now, you don't obviously have to get in there. You're watching. You start making lower highs, another lower high. Right now, you could say, hey, if price gets above this previous high at 377.45 or 377.50, or you're using these lows here, 377.60, right? Which is all these prices are what 20 to 60 are 40 cents from one another, right? That's what I would be looking at. And if we cleared them, I'm looking at the footprint, we're pushing up, all right? It's showing the same thing. I'm going to get in, especially if I'm playing 0 days, right? I'm probably going to look at 378s, right? Because I want to, and at 1 o'clock, they're going to be cheaper because it's later in the day. They've ate a lot of the theta, a lot of the time value up on them. So they start pushing up. So you get the 378s. You can say, okay, I'm looking at, we're pushing through. Now it just so happens we created a fair value gap that I like to see on moves up, right? We're up at not just a 45-degree angle, but greater than, I'm sorry, less than a 45-degree angle, right? You know, this is what a 25, 30-degree grade slope to the upside, if not less, a nice V-shaped recovery, on this trade. So you can take some off at 378, to minimize your risk. You can look at 378.50 as a next point. Your target would be, I'd probably target the bodies of these highs at 378.90 or 379, right? To take a little more off. If you hold through this move down, you may lose a lot of value, even though you bottom down here, right? Because, we're getting a little later in the day, but essentially you probably could have made more if you held it up to 379.40 area up here. Did that make sense?
Yes, Frank. Thank you.
Yep. Yeah, and like I said, and you can do this probably better having the actual options chart, the 378 calls for today, and it's gonna and using and trading it very similar because you're gonna actually see the contract price over here on the right. But if I was just using the equity chart like this, that's how I would trade it, and then I would take my contracts off as we're hitting these price points based on that chart here, and I have them side by side or overlapping just so I'm able to view it in this aspect and take trades from it. Okay. So that's really all I got for now, I guess. Unless I got any more questions or last minute questions that someone wants addressed or didn't quite understand.
I'm sure we'll have plenty more, Frank. Thanks so much for your time.
Well, thank you. I appreciate you guys coming and you joining us. And I know it's like cramming for a final. It's a lot to just dump on people. So I'm sure we can do this again at another later date and kind of get more in depth and go over it and kind of get refreshers on it, because I feel like it's a lot to process.
Yeah, I mean, it's a good information, Frank, and I appreciate your time. And so far, I was aware about the supply and demand and those imbalances. So I think using those purple and green channels, it's sufficient enough to start looking into the this footprint basically, and then slowly get into the numbers and try to make sense out of it, maybe.
Yeah, and I don't post charts every day with them, just because some days I don't see anything that looks promising or whatever. But I do try to post charts when I see stuff, and I'll mark stuff off, and you can kind of use it for reference on what I'm looking at that makes sense to you. And if it doesn't, just just ask me, say, hey, what are you looking at here? And I'll give you an answer on it. And that way you can kind of understand what I'm viewing or how I'm looking at it. So you start getting better at using them as well.
Okay, thank you, Brian.
Hey, no problem. Well, if no one has any questions, I'm going to go ahead and call it here. I appreciate you guys' time. Thank you for coming, and hopefully you guys learned something from this. And if you got any questions, like I said, feel free, and I'll do my best to give you a right answer on it. Okay. So thanks a lot, and have a good night.
You too. Have a good night, everyone.
Yep, good night. Good night.